turning 30K in 900K in less than 1 year. Is it possible? Let me tell you the big truth. Not everybody is going to be able to do this. During the years, I've shown and mentored a lot of traders. 2021, I brought 8 traders to above 6 figures, 2 of these above 7 figures. But let me tell you, it doesn't happen in the first year, at least almost never. So this trader started to trade 4 years ago. He confessed to me that when he started trading, he was basically not in a trading room. He found his account with 50K. He was trading, he told me, irrational, in the sense that he didn't have a proper strategy. So he didn't have clue of risk management, of what he was going to trade, not having a plan, and following random traders. For example, he was going on socials, following some alerts, focusing on the stock and trying to trade it. He started to trade big caps. First year, he wanted everything too soon. This is what he told me, everything too soon. And it doesn't happen overnight, especially becoming a stock trader, a day trader. You need a plan. You need to work on yourself. It takes months and years. The 50K, after 9-10 months, he blew up. He told me that he was passing a harsh time of his life. He was going into divorce, eventually didn't divorce, so glad for him. But he didn't know what he's going to do. So 2019, second year of trading, what he started to do, he started basically to fund his account again, trying to find a strategy that he liked, and trying to trade small caps. First few months of his trading, he almost blew up again. He funded a 30K account in the second year, not having, a complete good risk management. Again, not having a clue of what he was doing, trying to trade one strategy, but it eventually didn't work. And he was basically in a loop. So he told me that he had frustration. He was desperate. He wanted to make money. He didn't like the job that he was doing, but he didn't have a clue of how he could reach success. So he was going through different chat rooms, trying different strategies. But let me tell you, it's not about the trading room. It's not about the strategy. It's about working on yourself. 3 years passed. Okay, so the third year he came to me. A member invited him, happens many others. Some traders having good results, others having even better results. They invited him to the room. He started to trade with us. At least he was looking what we were doing and he liked it. So first 6 months, he worked by himself, following, the strategy, learning, studying. And he told me that, Jay, the strategy works, but I have still big lack of discipline. So he was having losses and win, losses and win. Second semester of third year, he started to work with me. And I think he really hated me because I was giving him so much work, practice, exercises, not only about the strategy, but a lot of work that he had to do on himself. So for me, it's everything about self-control and discipline when you trade. A strategy you can learn, 6-8 months, you can learn very good. Of course, will require a little bit more time when you're learning tape reading, when you're learning how to read order flow, but it's about how you can control yourself. So my main point was to be consistent. We didn't look for big numbers. We don't look to make, 4 figures, 5 figures a day. We're looking to make 3 figures a day. And when eventually started to doing that on the second half of the third year, he was basically, so happy, so proud. And we started setting goals. Now, what we were trading small caps, but it really changed drastically the way that he was trading 3 years before we met and the year we met. Now, in his fourth year, he funded again his account, 30K. He had a strategy. We are trading basically, and we're still trading right now, 2 main setups. So shorting small caps. We trade even big caps. We trade also futures, but it's traded like small caps. So the first 3 or 4 months were basically small wins, a little bit of losses, small wins, a little bit of losses. But he gained a lot of confidence. He gained so much consistency in these months. Basically, he learned how to use his risk management. He learned how to cut losses. He learned how to understand price action. And then is big, we say, path, its profit curve started to rise. Why this? Because we started to work in a proper way. So we were setting goals. Every time we used to reach a goal, we used to increase the size. Part of his profits we were wear out, always being cautious, conservative. So in case thing, would go bad, one day you didn't have correct risk management and he basically, let's say, blew up, you still had money on the side to restart. But with a 30K account, trading mainly 2 setups, okay? we got almost to 900K. This is in less than 1 year. During the year, we share like a lot of traders that you can follow on socials like Kyle DC, Bus, Michelin, Carfid, Chad K. A lot of these traders like became successful, but this didn't happen overnight. It took like years. Like this trader, 4 years to become this profitable. And this because he had a mentor, he worked on himself, he did exercise, he passed thousands of hours, really thousands of hours working and studying. Every single day when he was not doing something good, I used to tell him, now you're going to retrade. And he was sorry, he was upset. He said like, Jay, all the work I do, no, you still have to do it. And it's only by that, it's not changing the systems, not changing a strategy. It's working on yourself, figuring out what you did wrong and retrade it. Journaling, for example, we use TraderSync for this. I taught him how to use TraderSync to journal and know the risk reward, the profit ratio of each setup traded. Because something that is not simply paying, you don't have to trade. So this is what he did. What we were focusing on were day one gappers, gap down plays, day two gap up plays, and also overextended plays. These were basically the 4 setups. When I said before they traded mainly 2 setups, is because he loves to trade day one gap and grab. So simply a gap that pops and then simply dies on day one. And then the overextended plays, like you can see over here, very. The first thing that I think is important in the process is looking always every single morning the news. So this is Add to Trade. You can see also discount link below is the app that we realized together with add2trade.com. The first thing, as I said, look in the morning, every single news that is popping out. And then we run our scanner. Now, this is like during the weekend. So we go on the top list and we see all the new gappers that are coming in. For example, this was what happened on Friday. And we start filtering on the main gappers of the day. Generally, I start looking, remember, stocks with gap above 30%. Now, when something is not above 30%, as I said, we start focusing on overextended plays or gap down plays. We start like then digging into the company. We can see over here, for example, we go in our stats, we start looking at the float, institutional ownership. If it's SSR, like you can see over here, the stock was SSR. We start looking at the news of the company, and then we go check the financials. So if the company is healthy or not. So we need a general idea of how is the company doing. Do they have revenues? Do they have no revenues? Do they have cash? Like this company over here has 65 million cash and equivalents, and it still has a 1.4 cash burning per month. So they have cash for at least more than 30 months. History. By doing like this, I need to go on, different platform like, Toss, and you go on demand. Simply at a glance, I can see what happened on that day, what was the high of day, what was the volume, and I can find other metrics over here. You can see all the things that I can analyze in my stats. So that day, for example, we had this extension in pre-market and failed. So by reviewing this every single day, we have an idea of what the stock is going to do. And then I go check the gap stats. So over here, for example, we have 22 gaps with these parameters, and I've seen that 14 times, so 63% of the times, we faded before 11 o'clock. Means that the high of day was before 11 o'clock. So this is the first thing, okay? Analyzing the company, analyzing the news, and looking what basically the company did in the past. And you can see over here how I was explaining the first month of trading was basically win and loss and win and losses. And then he started to be adding size because he was consistent. Only when you are consistent, you can start building your account. Now, this is one of the plays that we love to trade. And this is an overextended play, Zero, or remember BBBY. So we don't trade unless for some scalps, we don't trade the first part of the move. This is an hourly chart. And in the video, I made a video 3 or 4 years ago explaining the potential of the $1 million pattern, how to trade the hourly chart and the hourly pivots. And over here, you can see what I'm saying. So you can see, for example, the first push, right? And then you start seeing at this top over here of the move bar, okay, opening at the previous bar high, okay? This is the close of the bar. This is the open of the next bar, and it pops and then it fails. So this level over here, this becomes the short, that becomes a stop. And then you have that unwind. And that's our profit from $17 down to $15.50, 16. And then when the stock sideways over here, you can see that we don't have a fail of this support. Basically, this is demand zone, right? We start having the demand at this level. We start like getting out of the position. You can see break of the trend line and then start moving to upside. And then we wait again. We wait for the same setup over and over and over. Now, what I like to do and what I teach is also how to trace your fib levels. For example, we trace on the fibs from here to here. And then on the backside of the move, we start shorting pops like the level over here, the level over here, the level over here. So not trying to short the front side of the move, but looking to short pops, to shorting spikes on the backside of the move. This was Vero, but the same thing happened on BBBY and many other stocks that were overextended plays. So this was the big move on BBBY. So we started moving over here from, remember, July 2022. This was the move up till 30. So we went like from a couple of bucks up to 30 bucks and then fit all the way down. And again, over here, what you see the front side of the move, right? And then once we hit the back side, we start like having these pops to short over here, over here, over here. So don't try to grab always a top. That's the main point of that short sellers shouldn't do, but instead trade the backside. Okay, once we find the top over here, all right, and how you know it's a top? Well, basically, I start using my J lines. You can see over here, holding dips, holding dips, holding dips. And then from this point here, we only have the backside. So when you have this backside, we start shorting the levels, we start shorting the levels, we start shorting the levels, and then we take the backside of the move. The other plays, as I said, were day one gap plays. Like, for example, we had a week ago over here on Lace. You can see the gap over here. So this is the first day, 7 o'clock, news coming out. And this is the first part of the move, right? First part, the move over here from overnight, 1.80, 1.70, up until $3.20, $3.30. And then over here, we have the backside of the move. So we start like looking to short this part of the move. When the price is sideways, you can see it's holding over here at J lines. We start having higher lows. Then we cut the position and we start waiting for a trade. Okay, we don't trade short this grinding part over here. This is a stock that having news every single day. If I remember, they have a news also with Coca-Cola a couple of days ago. So we start looking to short only the backside. We wait for all this move. What we do, we start taking our trend line. So we start taking a first trend line. We start looking for a second trend line. We start looking at the J lines. And then we start looking at the backside. So the majority of the money was made, as I said, on day one gap days, or also overextended plays. So not looking to short the first front side of the move. So on day two, day three, we simply wait for the backside, and you can go check. I made some videos giving, pretty good information. So go check on our YouTube how to trade the backside, what are the parameters, what are the setups that I use for the backside. And then when we trade these stocks, it's not just an alert in the room, but we basically explain the process, share the live execution. You can see my Zoom, you can see my monitor, how we trade, how we scale in, scale out, risk management and everything. So these are some of the setup that we traded together, and you can see his performance, what he was able to do in his 4th year of trading. So between 2021, 2022, how he grew his curve.